Aloha, guys. I am here with Brad Konishi, who is the president and founder of Harpta.com. You can find him in beautiful Honolulu. He is a wealth of knowledge in regards to everything Harpta. He is extremely knowledgeable about this topic. Brad, I am super excited that you're sharing all your knowledge with the audience in regards to any Harpta questions today.
Well, thanks for having me, Maly. I really enjoy doing these kinds of things, talking about this thing, even though I do it all day, like every week. I still enjoy it. This is, the favorite part of my job is talking to people and teaching them about what I do.
You know what, Brad? What I love about you is that you always operating and in servicing the people, servicing the questions that people have in regards to this very complex topic. So, and you simplify it very much for people to understand what it means. So, Brad, what is Harpta and why is it in place?
Okay, so that's a great question. Harpta is actually an acronym, and it's an acronym that actually stands for the Hawaii Real Property Tax Act. And so the reason why it's in place is that, sometime I believe it was around the mid or to early 90s or so, there was kind of a real estate boom in Honolulu. And what was happening is that a lot of foreign investors were selling their properties in Hawaii and making a large killing in real estate, because of the gains on their property, and then they weren't paying tax. And so, to protect themselves, Hawaii decided to put Harpta into place, which essentially is a withholding on the sale of a property. It's withheld at 7.25% of the gross sales price,
Right.
but it's withheld just to make sure that Hawaii collects what they're owed, insofar as tax is concerned.
Right. We all got to pay taxes, right? Can you briefly explain when does Harpta apply?
Okay, so Harpta generally applies, well, I mean, on the most technical level, Harpta applies to everyone who's selling property in Hawaii. But people who are residents of Hawaii and, can legally consider themselves residents are allowed an immediate waiver of Harpta by checking a box on a form called an N-289 that they receive from escrow. However, if somebody is not a resident, they can't use that N-289 in many cases to, get an immediate waiver. So they may be able to get a waiver by filing for it, but they have to be able to prove that they either have a tax loss or no
Right.
taxable gain on the sale. And if they can do that, if they're successful in doing that, and they have enough time before the close date, then they can get a waiver, and they won't need to have Harpta withheld.
And that's when you come to the rescue because you help with waivers as well.
Yeah, yes. So we help people with waivers. In some cases, people, in very, very limited cases, people are able to get Harpta reductions, and we also help people get refunds as well.
Right. We all love refunds, Brad.
Oh, yeah.
So you're the most loved accountant in the state of Hawaii.
Well, I mean, ask my wife, and maybe she might disagree, but
Okay, that's for another episode.
yeah. No, but and this is one of the things I really, really like about what I was doing, right? Prior to opening up Harp to Help at the beginning of 2020, I ran a tax practice, income tax
Wow.
practice that specialized in
Mhm.
assisting realtors and their clients. And so, I do annual income tax returns for a lot of realtors, as well as people who have maybe rental income and stuff. But here was the hard thing about it is that, because realtors tend to be self-employed, and many realtors don't pay estimated taxes they go along through the year. So what would happen is a lot of times when I'd finish a tax return, I'd give it to my client and, tell them that, oh, I'm sorry, but you got to pay, 20, 30, $40,000, that
Right.
you have to pay. And it hurt. I mean, even though it's not my money, it still hurts, right? To have to tell somebody that, knowing that they're going to have to dig deep in their bank account to get that money to be able to pay their taxes. And so one of the things I really, really like about Harp to Help is that when we're successful in helping a client, we either get them a waiver, usually a really, really large amount. When you consider that Harpta is 7.25% of the gross sales price,
Mhm.
uh, average price home about $1 million right now in Hawaii, you're talking about $72,500. So to be
Wow.
able to get a waiver for amounts that large, or to get refunds, in the 50 to 70 to over $100,000 range, that kind of satisfaction is just, can't even put a dollar amount on it. It's really, really satisfying.
Right, right. And you do such a great job because you're always not only educating other people on Harpta, but you do take your time in every single case. And for the people that you have helped on my side, they've been just, raving about your services. You do have a team in place, but the fact that you're always on the education side of things, you're educating yourself on what's happening and what are the current changes and how you can better strategize things for the clients, that puts you way above,
Well,
in regards to, people that are processing Harpta
well, thank
withholdings. And wow.
you know what? I really appreciate that. It came from many many years of doing this because I actually started in 2004. Well, my accounting career as it relates to real estate actually started in 2001 when I was hired away out of public accounting to actually be an auditor for a company. Well, I left auditing at PricewaterhouseCoopers to work for the Honolulu Board of Realtors as their controller. But then
Wow.
after I left there and worked, I wanted to keep my feet in the world of real estate tax. And so I started teaching a GRI class in 2004, and I taught that
Remember.
through actually 2021. Did you ever
Yes.
did you take my class?
Yes.
Gosh, that's
Yes.
so it's hard. Here's the thing: is I taught that for 17 years, and it's a 6-hour 1 day class. So it's a lot of information kind of packed into a short amount of time. And so over the years, testing and having my students right there to give me feedback, I was able to see how best to communicate a lot of the ideas I was trying to communicate. And so yeah, I had a lot of practice.
You've been around, and we're very blessed to have you as resource, Brad. And every single time that I take on a listing, I'm like, if you are looking at Harpta, Brad, you should talk to Brad. A question that pops very often is, who is considered as a resident in Hawaii?
That's a great question. And here's the thing: is you can establish your residency in Hawaii in one of two ways. And I'll briefly describe. Well, I'll name the ways, and then I'll briefly describe them. So the two ways are by declaring Hawaii as your domicile, or being physically present in Hawaii for a certain amount of time. So let me go over each one. So domicile essentially means, well, by the way, when it comes to domicile, it is only possible to have one domicile at a time. It's possible to have residences around the world, but somebody can only have one domicile at a time. And
Mhm.
essentially what domicile means is that you consider Hawaii to be your one true home and the place where you're going to return to after you've been gone for maybe on a trip or somewhere. Hawaii is your one true home, and that would be if Hawaii is your domicile. Another way to establish residency in Hawaii is by physical presence. To be physically present in Hawaii for something other than temporary or transitory reasons. And so, sometimes you have situations where, somebody's been living in Hawaii for a very long time. Maybe they've, like me, lived in Hawaii pretty much your whole life.
Mhm.
But then they move to the mainland, and then the home they sell, by the time they sell it, they're already established on the mainland. When you have a situation like that, you can't jump back and say that I'm a Hawaii resident.
Yeah.
Once you've established your domicile somewhere else, usually at that time, it's you can't really declare Hawaii residency anymore. So that's one thing that's important to consider is if you're moving, there is a point at which you are no longer a Hawaii resident. And for
Mhm.
the state of Hawaii, they said prior residency doesn't matter, only the residency on the date of sale. So yeah, that's kind of what it comes down to.
Right. And you know what? And what I love about you, Brad, is that you help people kind of figure it out in what type of situation they're in.
Yeah,
Right. So,
yeah,
because these topics, they get so complicated, especially for people that have not transacted in Hawaii. And
yeah.
this question I get so often. And I'm like, just talk to Brad. He'll guide you.
And
'Cause-
when it comes to the withholdings like Harpta and Firpta is federal equivalent of Harpta, and it's assessed at a much higher amount. What
right.
happens is if somebody is what the IRS considers to be a foreign person, foreign persons will be subject to Firpta, and Firpta can be up to 15%, of the gross sales price, whereas Harpta is 7.25%. So
Right.
so yeah, those are
So,
those are areas that I practice in.
And so now, Brad, what about who is responsible for collecting Harpta?
Good question. Here's the thing: is the buyer is actually the one who's responsible for collecting the harpta and sending it over to the state. You know, escrow is involved, of course. Escrow is usually the facilitator. They're the ones who kind of coordinate. They're the ones who actually cut the check, mail out the check to the IRS or to the state of Hawaii to send that money in that was withheld from the seller. So, but the buyer is the one who's going to be responsible. It's the
Yes.
seller who feels the pain, but it's the buyer who is responsible. The escrow company, the escrow officer is generally considered to be just a facilitator, and it's not really the escrow officer doesn't have enforcement power. So they can't tell somebody, well, you're not a resident and you're saying you're a resident, so I'm not going to let this move forward unless the escrow officer will not fix it for a good reason. They really don't have that authority. Ultimately, it's the buyer's responsibility to determine if the seller should pay Harpta and to make sure that they collect it if they should.
Right. And you know what? That's you, and you kept emphasizing that escrow is a facilitator because we do have those misconceptions during escrow to when, sellers, buyers are like, well, escrow is the one processing my Harpta. I'm like, no, guys.
It,
No.
it feels like that because escrow is doing just about everything
Right.
else related to the paperwork
Right.
and transaction, right? So it feels like it should be them, but ultimately the authority, the power to enforce this is with the buyer.
Exactly. So now we've talked about Harpta plenty, but how is Harpta used for? What is the use of Harpta?
Yeah, no, that's a good question. That's a good question. Harpta is a mechanism, and it's I kind of describe it as a blunt instrument, and I'll talk about it in just a second. But it's a mechanism to essentially protect Hawaii. Because we're thousands of miles away in the middle of the Pacific Ocean. A lot of times, when people leave Hawaii, they don't really think about Hawaii, even though they may own property. They might not think about the responsibilities that they may leave behind.
So,
And so what used to happen prior to HARPTA, being a requirement, is that people would sell for a large gain, make a lot of money, and then they wouldn't pay any kind of capital gains tax to the state of Hawaii, or they wouldn't pay sometimes GET tax for rental activity that they had. And so Hawaii was determined to make sure that they collected, and so they put this withholding in there. It's kind of like a security deposit, right? It's when you rent an apartment, there's a reasonable expectation that at the end of your lease there may be damages that you may have to pay for, right? The landlord doesn't know exactly how much that's going to be. It's something that they don't know. So what they do is they take the security deposit to protect them. Same thing that Hawaii is doing with Harpta is they're saying, well, we don't know what your gain is going to be. We don't
mhm.
know if you had rentals and you accrued thousands of dollars of general excise tax. But just to make sure that we're safe, we're going to take this money. But you know what? It's a blunt instrument. And here's what I mean by this is that it's the reason it's done like this, where it's 7.25 of the gross sales price, because people ask me all the time, why can't we just be allowed to calculate our gain, calculate the tax on that gain, and then just pay that over to the state of Hawaii? It's a more reasonable number because that's
Right.
closer to the amount that I'm eventually going to have to pay.
Mhm.
Uh, but the thing about it is that if that were the case, number one, you'd introduce a lot of opportunity for people to cheat.
Yes.
I hate to say it like that, but people
Mhm.
will. Where large dollar amounts are concerned, people will. So Hawaii wants to eliminate that. Also, too, Hawaii doesn't want to have to support something where people, because when somebody goes into contract, as you know, as a realtor, it's like 30 to 45 days before that transaction closed, and that time speeds by really, really quickly, right?
Right.
So Hawaii doesn't want to have to be put in the position where they're evaluating somebody's applications to get HARPTA reduced, and doing hundreds of applications every day, and going through that work. So they just say, you know what, slap 7.25%
Yeah.
onto the gross sales price. That's what you're going to pay, and that's what we're going to hold until you can prove to us that you owe less than the
Right.
amount that was.
And imagine the manpower
Oh
if
yeah,
we were if we were to do it the other way around. Brad,
Yeah.
I think we're going into a segue that is going to be very interesting for people watching. What happens when you sell at a gain and what happens when you sell at a loss? Can you
Oh,
walk us through that? And let's use the
sure.
$1 million because everything is $1 million
Easy
nowadays.
easy number. Okay, so let's go with $1 million gain. So if lucky person, right? $1 million gain. So if you have $1 million gain, and when you go into contract, you determine, okay, well, we have this gain on the sale of our property. At that point, you really don't have a lot of options to get Harpta either waived or reduced.
Mm,
Essentially, Harpta is going to be withheld. $72,500 is going to be withheld from your proceeds, sent over to the state, and then you can apply for an early tentative refund.
mhm.
Or you can just skip the early refund process altogether. Just wait until the tax season of next year, file a Hawaii income tax return, and get your money back that way. So there's one or two ways to get your money back if you weren't able to get a waiver prior to closing. So that would be what happens in a situation where there's a gain. Let's talk about a situation where there's a loss, $1 million loss. Poor thing, right? So the person sells their real estate.
Oof.
I mean, they go into contract, they list it, they go into contract, they get an offer. The offer is a lot lower than what they expected, a lot lower than maybe what they paid for it. And so because of that, they have this loss. In many ways, this is advantageous for the seller. And the reason why is that if you can prove to the state of Hawaii prior to the close date that you have a loss, then the state of Hawaii has no choice but to acknowledge that you're not going to have to pay any taxes on the sale to the state of Hawaii, and they'll give you a waiver, which is fair, right? Because if you don't owe any tax, or you can prove that you won't owe any tax to the state of Hawaii, they shouldn't be collecting something in anticipation that you might. So what will happen is, for somebody who is experiencing a loss, the upside of that is that they can use that loss. If they file early enough, they can use that loss to file for a waiver of Harpta, and then they wouldn't have to have it withheld, which is good.
You said a keyword there. If you file early enough.
Yeah. Okay. I was going to get to that. That's a good point, because this is the part that sometimes jams people up. Is the filing for a Harpta waiver or a Harpta reduction needs to be made during the contract period. So in other words, while you're in escrow, and it can be filed no later than 10 business days prior to your close date. So you have 10 business days prior to your close date. That's your deadline. You need to file by then. If you don't file it by then, you either have to extend the contract, which really throws the buyer usually into a real problem
And what if
situation.
you don't have extension time frame? Oof.
If you don't have extension time frame, then
Negotiate or
no,
oh,
this Harpta will be withheld, and then you can apply for a waiver after the fact.
right.
Yeah.
But you know what, Brad? I really, I mean, for people that are watching this, I hope that you guys can understand how intricate this process is. That either way, whether you have a gain or a loss, just go with the professional, right?
It's true. It's true. Here's the thing: I think in a lot of people's minds, when they enter a real estate contract, and I can say this even from first person perspective, because my wife and I, we sold a condo a couple of years ago. But of course I have plenty of experience with this. But of course, you enter the sales process just thinking, okay, well, you're going to list it, and then you're going to get an offer, and then the people are going to inspect during this contract period, the 30 to 45 days. They're going to look it over. They're going to say, that's fine. The lender is going to say, okay, that's fine. And then it's going to close, no problems, right? Anybody who's witnessed plenty of real estate transactions like Maly or myself, we know that there's a lot of things that happen
Oh yeah.
during the transaction. The buyer does the inspection, and the buyer says, well, here's some things I have issues with, and either these get fixed, or else we're not going to move forward, or you lower the one thing or another. Just a lot of things happen, so you just have to be willing to kind of roll with the punches, I think, is what it comes down to.
Right. And also operate with somebody that is seeing these
Yeah,
things on a daily, so
yeah,
that they can help you navigate, right?
exactly. Because they have to know what they need to do. What's the next step when a problem occurs?
Right. Yeah. Now, how would Harpta affect the seller and the buyer during the escrow process?
Oh, okay. So of course, the buyer. You know, I rarely talk to buyers because usually our client is the seller.
Seller.
But I do talk to sometimes the buyer's agents, I have on occasion talked to the buyers, but the buyer is really shielded from a lot of this, right? I mean, they have to
Hmm.
they're they have forms that they're given by escrow, and
Escrow.
that they have to sign, and they have to vouch to certain facts and everything. But as long as they don't have an issue with this, and the signing of the papers during closing goes fine with them, they really don't see much. Even though we mentioned earlier the buyer is responsible for collecting the harpta, to the buyer they see very little because the escrow officer is really handling the bulk of the thing, cutting the
Correct.
check, filling the forms that get attached to the check that gets sent to the state. But here's the person that really sees it, is the seller. And here's what happens too often and shouldn't happen is sometimes the seller isn't told about harpta and the responsibility for the
Right.
withholding. So when that happens, what happens is that they go into contract. The escrow officer puts together what's called an estimated seller statement, which is starts off. It's basically a ledger that shows what the sales price is, and all of the subtractions and sometimes additions to get to the very bottom line, and how much the seller is going to be expected to put back in their pocket.
Mm-hmm.
Anyway, one of the large numbers on that, of course, is going to be that 7.25% for Harpta. So if they weren't told about that, as a seller,
Oof.
and they're reviewing this form, then all of a sudden they see the subtraction. They're getting 72,500 less than what they expected because of this Harpta, and they don't know what Harpta is. It can be really stressful to them. So realtors should be aware. Just make sure that you inform your client of it so it doesn't come as a surprise. I have stories. I have so many stories about this that I've heard from other people where the Harpta came as a surprise, and the seller just walked away from the table.
Right.
Yeah,
Yes.
I'm not
Fair
going to do.
enough. I mean, they were not told. They're just like, what is this?
Yeah,
Oh my
exactly.
goodness, Brad. I
One of the things, though, and I think that's important. In my interactions, I know with the client, and I'm sure with when you interact with your clients as well, is to let them know that Harpta is not a tax.
mm-hmm,
Harpta is not something that the government takes and they keep forever.
mm-hmm,
Harpta is a withholding. It's something that the government takes to make sure that they're safe. And so once you can prove to them that you don't owe them what they're holding, which is in Harpta especially almost always the case, they're obligated to refund you the difference. And so
right.
always remember that.
Right. Yeah, I think a lot of people have those misconceptions, right?
Yep.
But
Yep.
hard to navigate when you don't explain to the client at the very beginning, or at least give them a seller net sheet, right? For them to see how much they're going to net and what are their obligations. So
Exactly.
what happens when the seller is not current in their Hawaii tax filings?
Oh,
Let's
yeah, that's a good question because we run into that on occasion. And let me kind of paint a picture of a typical scenario that we see, and we see it quite often enough to know that it's a problem, and this is why one of the reasons why Harpta is put into place. We have on Oahu especially, we have a lot of military. We have a large military community here. And one of the traditions among the military service members is that when they go to a new location, especially a location like Hawaii where real estate is so desirable, they're told and they're given support to be able to purchase real estate, so that they have a home to move into and live in. So that's something that's really good. That's something really good that the military does. But what happens a lot of times is that, after they've been living in the house maybe 1 or 2 years, military service members are always being rotated. They're always being what's called PCS,
mhm,
permanent change of station, where they're moved to a new locale. And so sometimes when service members, that happens when they're bought a house, they're stationed in Hawaii, then all of a sudden they get maybe transferred to somewhere in Texas. So it usually happens pretty quickly, and it's an upheaval, right? So they don't have a lot of time to do research on what they should do. So they turn their home into a rental, but they don't research things like general excise tax or transient accommodations tax, or even the Hawaii income tax
right.
requirement. when you
Right.
do that.
Mm.
Sometimes we run into situations where somebody has moved from Hawaii, turned their home into a rental, had, a few years of rental, and then now is trying to sell. What's important for them to know is that in order for them to get any kind of Harpta waiver, reduction, or a refund, they need to be current with all of their tax filings and tax payments. And that's one of the reasons why Harpta was put into place, is to catch people who aren't, who haven't been paying their taxes. So yes, they do
Right.
need to get current. Let me talk quickly about this program that the state has right now, because it's really important,
Mm.
especially if you have people who became landlords and weren't aware of the filing requirements. One of the filing requirements is general excise tax, and it's a tax 4.5%. So we're here in Oahu, we're 4.5% of your gross rental. One of the things that the state does is that the state has, for people who have gotten behind on their GET payments,
Mhm.
in particular landlords or even realtors, those people are allowed right now in a limited program called the Voluntary Disclosure Agreement. If the state isn't currently chasing after them for payment of general excise tax, and they have some general excise tax due, the state will, in many cases that we've seen, forgive penalties on the past due taxes. And so those penalties can be tremendous amount of money. Whatever tax is owed, the penalties max out at 25%, and they max out in 5 months. And so consider whatever you owe in taxes, adding another 25% to that, and getting to be able to get that waived is a tremendous, tremendous benefit. If somebody is out there who's a landlord who hasn't been paying GET, let us know. We might be able to help and get you a penalty waiver.
Hey, wow. I mean, what is it that you don't do, Brad?
Oh, I
Oh
don't.
my
I don't do income taxes, which is something that everybody expects CPAs to do. I know.
oh my goodness. No,
Yeah,
and you process these so much.
yeah,
You know,
yeah. We do. Over the last few years, we've probably done close to 1,000 filings for refunds and waivers. I mean,
wow.
we're constantly getting them. Just this morning, I was at the State Department of Tax picking up waiver forms called withholding certificates, and we had
Uh-huh.
four, that were returned to us. And so, it's a constant thing where, and that's a good thing about it. That's what gives us advantages over other people who do this type of work,
Hmm. Hmm.
is that
No, I mean, but Brad, you're harpta.com. I mean, it's
yeah,
like there's there's no competition.
it's funny. This has really become a niche for us, and
Oh,
yeah.
right, and you're handling it beautifully, Brad. I don't picture anybody else. I mean, you give education to real estate agents. You're putting your content out there constantly. Now, for you touched on the certificate that you're getting all the time.
The certificate of withholding is actually the N288B. It's after it's been reviewed and returned. That's the N289 is another form. The N289 is something that's primarily between the seller and the escrow officer. We usually don't see the N289, but it's a
That is the one
way.
that I see the most.
Yeah.
Yeah.
That's when somebody goes in the contract. If they're eligible for an immediate HARPTA waiver by checking one of the three boxes,
Hmm.
they can get an immediate HARPTA waiver. They don't need to worry about HARPTA being withheld.
Right. Brad, do you want to touch on the other two forms, the 288B and 288C, for
Oh yeah,
people
yeah.
that are?
So the N288B, the B forms are the ones that get filed prior to closing. That's the one that has the due date of no later than 10 business days prior to closing. So that needs to be filed, like about 2 weeks, usually is about 10 business days in advance of the close date. So the N288B, once again, for waivers and for reductions, but that's it. Once the person closes, the only form that they can use before the end of the year to apply for a refund is the N288C.
Mm.
And the N288C is the form that they would use to prove to the state, okay, you're holding my $72,500, but look at my N288C. If you look at all my documentation that I've attached to it and all of my numbers, maybe my actual tax liability is only $10,000. So my tax liability is $10,000. You have 72,500 of my money. You keep 10,000, return 62,500 to me. And so that's essentially, the N288C. And what the whole process kind of is leading to.
Thank you so much for explaining that. I think for people, sometimes they're like searching for those forms. And so
Yeah,
perhaps if they encounter this video with those forms, then they get
yeah,
to this content.
yeah.
Who is considered a foreign person?
This is good. Okay, so foreign person, the term foreign person really refers to Firpta. It doesn't, it's not something that we use when evaluating whether Harpta applies, but this is the foreign person is the person to whom it does apply. Firpta does apply. And so foreign persons are, people who are not US citizens. It's probably easier to describe a foreign person by describing what they aren't. And so anyone who is a U.S. citizen, regardless of where they reside, is not considered a foreign person for FERPTA purposes. Anyone who has a green card, who is residing in the United States and has a green card, they're not considered a foreign person. Certain entities that are registered to do business in the United States may possibly be considered to not be considered foreign persons and may be able to escape FERPTA, even if they have foreign ownership. So yeah, essentially, in many ways, a simplified, though not 100% accurate way to view it is any kind of entity or individual that has a deep connection to the United States is usually not subject to FERPTA, but
Mm,
everything else usually is.
right. That's beautifully explained. I think it was pretty clear.
Okay.
Let's talk about fraud, because even though we're in paradise and we're surrounded by palm trees and the aloha spirit, fraud happens sometimes where people, that are not resident to the island, sometimes they want to claim as they
Yeah.
are. So what
Yes.
are the implications of doing that?
Okay, no, this is a good one, and one of the ways I usually describe it to people is, I say picture a seller, a seller who's selling $1 million house is sitting in front of their paperwork that they receive from escrow, and on this form N-289, if they check this little box, that they're a resident, even though they're not, they check this little box, and if the buyer doesn't know any better, they get away with not having Harpta withheld, even though Harpta should have been withheld, right? I said, just think about it, how easy and how tempting it is to just check little tiny check
Little
mark, and then all of
time,
a sudden you put 72,500 more into your pocket, right? By doing that. But here's the downside is that this is something that Hawaii does enforce, and the reason why they enforce it is because of the dollar amounts are so large, right? This isn't cheating taxes for to get an extra 300, 500, or even 3,000 or
right?
5,000 bucks. If you're cheating on Harpta, you are cheating for tens of thousands, if not over $100,000. So it's a large amount. Usually what happens, and because we have a little bit of experience with this because we've represented people who have cheated somehow on their Harpta forms, and now the state is going after them, right? Because we developed this
Boy,
reputation for helping people where the heart, in the world of Harpta, a lot of times, a few times when these people have been caught, they go back to their escrow officer, they go back to their real estate agent, and then they're
right.
points it to us.
Hmm.
It's we talked a little bit earlier about it's the buyer's responsibility. So usually the state will contact the buyer first, and the way it will look is a letter that says you were part of this transaction for the sale of this home at this address on this date. You were supposed to have collected Harpta in the amount of what, $70,000, but you
Mm,
didn't. So now we're asking you to pay the 72,500, right? Naturally, a letter like that is going to scare somebody a lot, coming from the state of Hawaii. So
right.
first thing they do is they usually contact their realtor. The realtor will go back to escrow. Escrow will pull out the N-289, and usually the case, at least the ones we've represented,
Hmm.
the seller checked off that they were a resident and they signed their name to it. And so because of that, right, all of a sudden the buyer is alleviated of this responsibility. They
Hmm.
were lied to and they had really no reason to believe that the seller was lying. So they're
Right.
innocent.
Right.
All it goes back to the seller. And so now the state starts to demand, the full payment of Harpta from the seller. And that's where I've been brought in, we've negotiated with the state, and we've gotten that amount reduced, if we had to. In some cases, the seller is just like, oh, they feel bad, they feel guilty, so they'll just cut a check for the entire amount that the state is asking, knowing that it's a withholding, right? They can file for a refund next year. So, so it depends on the circumstances and how much of a sense of guilt the seller feels. Usually will be the determinant of the outcome.
Right. And I think the recommendation here is to just proceed with how things are legally, right?
Yeah.
Just avoid yourself a headache. Now, Brad, what happens when people perform a 1031 exchange?
Okay, that's good. 1031 exchange is a hot topic because, we talked a little bit earlier about Form N289. Once again, that was the form that the seller receives from escrow when
Right.
they go into contract. And then checking any one of these three boxes on the Form N289 will get the seller an immediate waiver of Harpta if it's legit and the buyer accepts it. So
Right.
let's talk a little bit about 1031 exchanges, because 1031 exchange is really closely related to the N289. On the N289, on Form N289, Box 2 is a section for non-recognition provisions. Non-recognition provisions are specific type of transactions where the gain is not actually forgiven, but the gain rather is deferred to a later time.
Mm.
And that's exactly what a 1031 exchange is. A 1031 exchange is a non-recognition provision. So if somebody is entering into a 1031 exchange, and it's a clean 1031 exchange, and I'll talk about that in a minute. But if they're doing that, they can check box 2 in the Form N289. They can rely on their qualified intermediary, the person who's kind of
Mhm.
helping them coordinate the 1031, to give them the proper verbiage to put on that Form N289. And as long as the buyer accepts it, they're fine.
Mhm.
They're going to have no Harpta withheld, and they just get to cruise off into the sunset. Let me talk a little bit about what I meant by clean 1031. Sometimes people who are doing a 1031, they're thinking about, okay, the replacement property, the property that I'm going to land on, that property might need work. So I'm going to pull some money out of this transaction, not a whole lot, maybe 10,000, 20,000, and I'm going to use that money to fix up this, the replacement property. One thing to keep in mind, if you pull any money out of a 1031 exchange, you are not allowed to use Form N289, which means automatically, by default, the HARPTA will be assessed on the entire amount of that relinquished property. So, if you relinquish the property, it was $1 million, then all of a sudden, if you might have to pay that. If even if you're doing a 1031, you might have to pay that amount. So just know it should be, try to do a clean 1031. Try not to pull cash out of the transaction.
Hey, Brad, that is incredible that you mentioned that because how many pages you will have to read through to just get to that information. So that's why
Oh,
it pays to be with a professional like you and to engage in business with somebody that is reading and really on it because you really like live and breathe Harpta all day long. So now, Brad, we spoke plenty about Harpta, so
yeah.
much, but what is Firpta?
Okay, let me talk a little bit about that. So FERPTA is kind of like the federal equivalent of Harpta. And actually, FERPTA actually came into existence first before Harpta. Hawaii was kind of influenced to do Harpta after FERPTA came into place. And so is for people who are foreign persons who are selling real estate in the United States, anywhere in the United States. What happens is they are going to be subject to FERPTA. And FERPTA, like HARPTA, is not a tax, it's a withholding. It's an amount that the Internal Revenue Service demands gets paid upfront, put into their coffers, and held until the seller can prove that their liability is less than what the IRS is holding. So FERPTA, like I mentioned earlier, HARPTA is an acronym, stands for the Hawaii Real Property Tax Act.
Right.
FERPTA is the Federal Real Property Tax Act. So it's, the purpose is entirely the same, but the actual operation of it is quite different. And it has a lot to do with the fact that the Internal Revenue Service, as compared to the State Department of Tax, is just a really, really, really much, much larger institution. And so because of that, kind of meandering your way or finding your way through it is a little bit more difficult. But
Right.
essentially, the way it works is this. Foreign persons selling property in the United States will be subject to this 15%, up to 15%. It might be as low as 0% for certain properties, but you know what? From a realistic standpoint, I rarely see 0%. It can sometimes be 10%, and I rarely see 10% as well. It's almost always 15%,
Yeah.
and it's an automatically 15% for all properties over a million.
Oh
But
boy.
the 15% gets withheld. And here's something that's a little bit unusual about the way FERPTA is handled on the mainland as opposed to the way FERPTA is handled here on the mainland. In many places on the mainland, the escrow companies have agreed to serve as the withholding agent for the buyer. So they're basically the agent for the buyer. What happens is there's a certain amount that's designated for FERPTA. And after closing, the escrow company will hold that FERPTA money while the seller actually applies with a form called an 8288B with the IRS. In the olden days, is like 3 years ago, the IRS used to review all of the 8288Bs within 90 days and then send the decision back to the person who's representing the withholding agent holding the money, usually the escrow company. But what's happened over time, over the last 3 years, and I'm sorry I'm going into this story, but I got to explain why things are the way they are now. Over the last 3 years, budget cuts have really, really pounded the IRS. And then also COVID hit, right? So because of that, the IRS has been really severely, severely labor short, over the last several years. And if you file the 8288B prior to closing, that's the FERPTA form that you file with the IRS to be able to get a refund, somehow from them. What happens is that whereas it used to take 90 days, now it can take 6 months, sometimes over a year to get back. So as a result, escrow companies are saying, you know what, I don't want to hold on to this money anymore. So right after closing, Hawaii escrow companies, almost without exception, will send that money into the IRS regardless, right?
Right.
So,
Right.
so that's the way Harpta, used to be handled. But because of the problems with the IRS, Hawaii escrow companies generally don't allow that anymore. They send the money in, and it's a lot harder to get your money back, though there are ways.
Right. I think, to go at this alone, it's just not advisable. You are,
All the things I'm talking about are over my what it's like. I've been teaching this since 2004, so this is like 19 years of experience. That's why I'm able to rattle these things off. But you know what? I mean, if you asked me these questions, say 15 years ago, I would
yeah.
have struggled with the answers. And I had been in it like, 4 or 5 years at that point. It takes a long time to learn all this stuff.
Right. But you know what? I mean, you're dealing with really big numbers, especially if you're selling here in Hawaii. Property here is over a million. And to not have those items handled properly, it's just a disservice to your finances, right? So I think, yeah, I think everybody should give Brad a call. Brad, how can people find your services, and
Okay.
how can they get in touch with you
Yep.
during
So
normal business hours, guys?
yeah. During normal business hours, please. Usually, well, I'm usually here 6 or 7 days a week, but Monday through Friday is when we answer our phones. Usually we answer the phones from 9 to 4. We usually try to keep the window a little tighter, so we have the first hour in the morning, the first couple hours, and then another couple hours in the afternoon to actually do forms. But yeah, contact us, harpta.com. Harpta.com is our website. You can call us at 808-737-4412, or you can email me at brad@harpta.com, and we'll be happy to, take a look at your situation and see if there's any possible way that we can work together to get you some relief from this withholding.
And you know what? What I love about you, Brad, is that you strategize so well with clients. You provide a path of action, you provide them clarity so that they can kind of see that they're well taken care of. And yeah, we're very grateful to have you on the islands, Brad. Thank God for you, because
Oh,
this
thank
is
you
this
so
is
much.
beyond. Yeah, it takes a while, right? Like exactly what you said. It's just a lot of information, but you've been able to put it in a format to where people can digest it and understand it. So I thank you so much for this interview, and I look forward to people contacting you. And you
Well, thank
know,
you so much, Ali. You know what? I really enjoyed doing this. So anytime you feel the need to want to give me a call again and put me on this show.
I will love that. I will love that. I will love that, Brad. Well, I wanted to thank you so, so much. And so we're going to wrap up this interview, guys. You already have Brad's contact info. And if you need to connect with him directly, you have his email, his phone number, and harpta.com. I mean, Brad, I love it. I love your domain name.
Well, thank you so much. And Maly, have a great weekend.
You too. Aloha.
Take care.